Helping us to break down today's trading action, we have trader George Tkaczuk of RMB Group standing by live at the Chicago Mercantile Exchange. And our featured guest is Neil Hennessy, CEO of Hennessey Advisors. And Neil, let's start things off with you. There's a lot going on this week. You've got the State of the Union. How closely are you going to be watching what the president has to say?
Well, of course, I'm going to be watching what our president has to say. Carol, one of the things I'm looking for out of Washington, be it our senator, our congressmen and women, or the president, is clarity. And we have to get some clarity. Otherwise, businesses aren't going to go and expand, hire, or actually take on more debt.
Do you feel like, we've certainly heard from the president a lot over the last week, particularly as it pertains to financial. Do you feel like we're starting to get more clarity?
Absolutely not. I mean, we got one proposal one day, we have another proposal another day. Last week we're bashing the banks. This week we're saying, okay, well, now we need jobs. I mean, we really got to sit down and try and get clarity and make sure that everybody is on board, that we understand what the rules are, Carol. Right. As a businessman, as a small businessman at the same time, I have no idea of what it would cost me to hire another employee because I don't know what's going to come out of Washington.
No, some good points. George, let's bring you into this. What do you think? Where do you weigh in on this? Do you think we're getting more clarity, or you agree with what Neil's saying?
I agree with what Neil says. What we're really looking for as traders is we just want to see the president be a little bit more business friendly. When he gave his speech last Thursday, it really scared the markets tremendously. We saw put option orders coming in on the S&P like crazy that day, and he's just sort of like, we're from the government and we're going to show you how to do things, and we don't like this and we don't like that. And so we'd like to see just a little bit more gentle speech on the business side of things.
Hey, George, let me stay with you for a moment, because explain today's trade. I'm watching the markets. They're coming off kind of this downward move that we've seen over the last half an hour, but we've definitely come off our highs, and particularly in the last 20, 30 minutes, we've seen some selling in those major equity averages. Kind of what's the mindset of traders at this point?
Well, there's a few things going on. Basically, the market hasn't had a big correction since last March. We've had a lot of 5% corrections, 9% correction, June, July. So even if we go back to the very first week of earnings, when we had Alcoa earnings, Intel earnings, especially Intel earnings, they beat on the top line, they beat on the bottom line. They weren't quite a leading stock, but they were a bellwether, and the market sort of sold off. And ever since then, earnings are coming out. Very few companies are getting really well rewarded for what are some stellar earnings. So it looks like the market almost really wants to correct, and it's just like a self-fulfilling prophecy. So we're still very bullish going into 2010, but we think we might be in a correction here, and maybe it'll be 10, 12%. We're really not sure yet, so we're watching it very closely.
Hey, I want to go back to our guest, George Tkaczuk, out in Chicago, also Neil Hennessy. So, Neil, let me ask you, where are you in this valuation argument?
Well, I think, Carol, what you have to look is the facts. The facts really are, in the mutual fund industry, almost 100% of the money that's being invested is going into fixed income. And that's clearly not the place you want to be if interest rates are near zero. So what you're seeing is money being pulled out of equities, put into fixed income, which tells me that consumer confidence in the market is not back, and they don't believe that we're in the beginnings of a bull market. And so with $9 or $10 trillion still sitting on the sidelines in bank deposits and money markets and so on, at some point in time, it's going to move off the sidelines and come into the market. And then we're going to see the market start to move into higher territory. But right now, all the money's going towards fixed income, which I would argue is not the place where you want to be.
Hey, George, got 10 seconds for you right now. You two seeing signs that investors not really ready to come back into the market fully here?
I think the investors are still scared. I mean, I think they should be coming back in, but I think they're still very scared to come back into the market.
Let's get back to our guest, George Tkaczuk, and also Neil Hennessy. Hey, Neil, we do have the Fed meeting. They kicked it off today, a two-day meeting. Are you expecting anything new or different from Fed members tomorrow when they release that statement?
No, I really don't, Carol. I think what was just previously said is that the market's still nervous about what the State of the Union address is going to be. Or are there going to be new glitches? They've been floating, Washington's been floating all kinds of ideas in the last couple of days trying to figure out what will work or not work with the American people. And so I think the markets are just very jittery to find out what tomorrow night might be, because it might not be what we heard in the last couple of days.
Well, that's a good point. George, if we don't get much from the president tomorrow, what would you anticipate in terms of how the market trades off of that?
Well, I think, again, the market is going to be listening to how he approaches business. Seems like he's trying to throw business a bone when he's talking about, reining in discretionary spending. And so the market's going to look at that and see maybe how sincere. But of course, the president's a very good speaker, and the market now is also going to look like not only what he says, but are any of these programs actionable? And is he going to be able to accomplish any of the programs that he wants to come out with?
Neil, once we get beyond the State of the Union and we get the Fed's statement, I mean, what's your focus here? Is it corporate earnings? What is it the most here?
Look at corporate earnings. Corporate earnings, like George said, are coming in very, very strong, and I think they're going to get stronger as the year goes on. I also think you're going to see a lot of companies not only initiate dividends, but raise their dividends, because I think we're going to be in a slower market until we actually figure out how you can make more money without the government involved. So if I look forward, I'm looking at dividend-paying companies. You can look at IBM. They earn $10. They pay out $2.20. If they just raise their dividend 10 cents, it's 22 cents. It goes from 220 to 242. Big deal. Walmart the same way. Chevron. There's so many companies out there that could raise their dividends, that could raise this market and get some of that $9 or $10 trillion off the sidelines and into the marketplace.
Hey, Neil, it's Julie here. So many people have been talking about corporate earnings and how they expect to deliver. And indeed, we've seen a lot of companies beating numbers, and yet the stocks haven't necessarily been going up. So if that continues to be the case, I mean, what's going to turn that around? How are stocks going to work higher?
Well, that's why I think the dividend story plays in here, because people are concerned, can they grow their revenue line? The interesting part is, even if you don't grow the revenue line that much, it's all fallen to the bottom line. And so I think companies going forward are just waiting, which we began the program with, to find out, okay, what will it cost me to hire an employee? And do I want to go out and take that risk or don't want to take that risk? And so they're holding back, and you're seeing what companies are doing. They're hiring, but they're hiring temporarily. Only temps are being hired. Nobody's getting hired full time.
George, Neil, we're breaking them down. Neil, any thoughts in terms of Yahoo? We mentioned the stock's down here in the aftermarket. They beat in terms of revenue, but did miss on that EPS number.
Carol, I'm not really sure, because there's a lot of different numbers that go into the earnings per share. So it's really come down to me, what was their operating cash flow? Did that beat expectations and maybe not so much earnings? Because now you're talking about 2 cents. What does that really add up to? So maybe they took extraordinary items. I'm not close enough to the numbers, to be honest with you.
All right, fair enough. George, any thoughts though in terms of how we mentioned the stock is down though here in the aftermarket, how it might impact the trade tomorrow, especially in a market where you gentlemen have been saying there's a lot of questions still out there?
Yeah. Well, like we said, the market's still correcting, and Yahoo basically may not be treated that well tomorrow morning. Of course, we'll have to see. Again, Yahoo isn't quite a leading stock on a relative strength basis, but it is sort of a bellwether stock. I think it almost seems like the market, they're looking for jobs. The market wants to see jobs. Now, this Friday we got a GDP number coming out. And we think that's going to be really a knockout number, anywhere between 4.5% to 5%. And now our models dictate to us that, if we get 2 quarters of 3%, over 3% growth, that's when the jobs should start coming back. So that should be somewhere around the end of the first quarter, second quarter of this coming year. And maybe that's what it's going to take to lift this market. But I mean, the companies are doing good.
All right, we're going to leave it on that note. George, thanks so much. George Tkaczuk at RMB Group out in Chicago. Neil Hennessy from Hennessy Funds, our thanks to you as well.